Back before NVIDIA reported earnings in November, the third quarter earnings report, I came out on YouTube and said that I was worried that it might sell off 40% from its then all-time high. NVIDIA has a tendency to go through cycles. It makes a new product, it gets a lot of demand for that product, the demand gets overstated, and then NVIDIA sells off significantly from that point. And given how much of the hype bubble we've had around artificial intelligence, I still feel like that might be the case. However, this is a good time for me to revisit a couple of things. First off, I was early and therefore I was wrong. I don't agree with anyone who says they were just early. In this game, when you're talking about the stock market, if you're early, you'll be off sides and you are simply wrong. However, that doesn't mean I don't think a 40% sell-off in NVIDIA could be coming. And I felt like this was a good time to talk about what it means to be a long-term investor and bearish. In other words, you can be both bearish and long. When it comes to any of my investments, if I feel like it's getting too frothy, I don't short the markets and I don't short individual positions. One of the biggest dangers that comes from shorting or selling short is that you're borrowing shares and then selling them to the market with the idea that you'll buy them at lower levels. However, there's no limit on how high a stock or the index could go. In other words, when you're shorting something, your risk is limitless. What I do instead is I'll sell some of my own position. Consider it shorting yourself. I'll trim a little bit of my own position and take profits in order to reduce the amount of exposure I have to an asset. I did this myself going into NVIDIA's earnings report. Back on November 14th of 2023, I sold 7.07% of my position at $496.42. Obviously, I still kept the vast majority of my position, nearly 93%, and it still exceeded the maximum target allocation size for my flagship portfolio. It was in excess of 7.17%. However, by taking those shares off the table, I freed up that capital to buy if NVIDIA sold off. And it did pull back a little bit. However, this week, NVIDIA really broke out. In the Consumer Entertainment Expo, they talked about their new graphics cards that would be able to do artificial intelligence. The 4090 Super, the 4080 Super, and the 4070 Super. The reaction to these cards, which are consumer-grade graphics cards, was huge. And as you can see, we now have a new all-time high for NVIDIA, up here at $543.25. I've been using NVIDIA's products since the 1990s, and although I do love their graphics cards, I kind of feel like this move is still overdone. Now, does that mean I'm going to take more profits? Not yet. I do have a target to take profits around $585, a price that I calculated using Fibonacci retracement. However, unless it gets that high, I won't take any more profits. Now, why do I keep saying that I can expect a 40% pullback in NVIDIA? Well, I've been in NVIDIA since 2016, and I've seen it pull back more than 40% several times. You can see that just from 2017 to 2018, NVIDIA had two pretty significant pullbacks. Back in 2017, it pulled back nearly 17% in the matter of 2 months. Then in 2018, within about a month, NVIDIA pulled back significantly again, dropping more than 18% in a month. And these sell-offs were just based on market moves. The S&P 500 pulled back, and NVIDIA pulled back even further. However, if you look at 2018 going into 2019, you can see that NVIDIA disappointed and pulled back nearly 60%, 57.49%. What happened here? In October of 2018, NVIDIA announced that the demand for its graphics cards was mostly based on cryptocurrency mining. And up until that point, NVIDIA had been saying that the demands for its graphic cards were not based on cryptocurrency mining. However, it came out that they were wrong. Therefore, it sold off 57.49% just in a matter of 3 months. Fast forward into April of 2019, and you can see that it pulled back again. NVIDIA sold off more than 30% in 2 months, and this really wasn't based on any news either. This was general market fluctuations and demand for NVIDIA stock that caused the pullback. During the pandemic sell-off in 2020, you can see that NVIDIA pulled back nearly 43%. Just like the rest of the market. However, the S&P 500 only pulled back 35%. Nvidia pulled back even more, even though, as a company, it wasn't as affected by the pandemic. It's not like people were going to stop buying their graphics units, and it's not like they would have gone out of business. They were generating a lot of cash flow, but it still oversells in comparison with the rest of the market. Most recently, when we look at Nvidia's sell-off from its high in 2021 to its low in 2022, you can see that it sold off 68.79%. In other words, a sell-off of anywhere from 18% to 70% happens on a regular basis in Nvidia. And as long-term investors, it's up to us to be aware of those pullbacks and be careful when it comes to how to manage risk in such a volatile stock. Regardless of whether you agree with me that Nvidia could pull back that much, if you're long Nvidia, you need to prepare for that kind of pullback. Now, that doesn't mean selling your entire position today. Instead, what that means is consider making a buying plan. Look over the past and find key levels of support that Nvidia has made over the years and consider using them as places where you would buy more. For example, just a few months ago, you can see that Nvidia pulled back to $392.30. And then we've got the top of the gap fill down here at $366.35, where it recently broke out last year. At this point, with its all-time high at $543.25, if we were looking at a 40% pullback, that would give us a price target of $325.95. And as you can see, that conveniently fills the gap that Nvidia saw when it leapt in its May quarter report back in 2023. You may have heard of gap fill theory. The idea is that no stock or index will ever leave a gap in its chart. It might take years for the stock or index to go back and fill the gap, but whether it gaps up or gaps down, the theory is that the stock will always go back and fill up that gap. This would work perfectly with the idea that it could pull back 40% from its all-time high. If Nvidia did so, it would perfectly fill the gap. When will I start getting bullish on Nvidia? I really do believe that it's incredibly frothy, and a lot of the bears out there are thinking that there were triple orders, people putting in 3 times as many orders for the chips that they needed than they actually did. Once Nvidia can start meeting the demand with a supply that it needs, the question is that going to still maintain the demand? In other words, even if they're meeting the demand, will there still be that many people who want to buy their chips? If Nvidia is like it has been in the past, it will continue growing in the future. Don't get me wrong. This is an excellent long-term investment, which is why it's the biggest position in my portfolio. But I always need to be prepared for those epic sell-offs. The next big catalyst for Nvidia comes on February 21st when they report earnings. And if they come out and announce that they've either met or exceeded the demand that everyone expects, that's great news. And I will stop being as bearish as I have been. However, right now in January, we're seeing a lot of semiconductor companies come out and report that their demand isn't as high as they previously thought, and this is causing them to sell off significantly. If Nvidia falls in line with the rest of its cohort, then its February earnings report could be quite disappointing, and it might signal the beginning of a significant pullback in Nvidia. Now, does that mean it's coming back 40%? There's no guarantee on any of that, and I probably won't make a price target guess like that again in the future, but I'm always aware of any of my investments pulling back. To learn more about long-term investing, check out this video I made about Boeing and how investors can prepare for negative news catalysts that no one sees coming.